Okay, here we are. Seems to be working. Morning all. Seems to be working now. Boy, power failure just before the live show. Can you believe it? Had to get all the Jennies running and everything sorted out so that we can do the show today. So welcome to the live show. I hope you guys are all here. Hope you'll still be around for the show. And hopefully this is going to work out the way I expected it to. Right, don't forget, trading's risky. Most traders lose money, and if you're unsure, you probably shouldn't even be trading. As you can see, there's been a lot of volatility in the markets. There's been a lot happening in the markets lately, and we've been spiked out of quite a number of trades, causing our account to drop off quite substantially by $800 or so. So we need to fix that this month, guys. So you must choose some good trades. Your trades have failed. Hi, Luigi. Good to have you back. Good to see you again. I hope you all can hear me, and I hope everything's working, because everything's working on backup power today. As a result of a nasty planned maintenance, they say, now that I find it out. And nowhere on my system does it show me any planned maintenance. But other people got it in other areas, but our area's out. So, and they now they tell us there's planned maintenance from 9 till 4. I mean, great. Thanks a lot. It's good for traders who work on power, and it's good for people who do videos like this, and you know, that sort of thing. It's just wonderful to let us know at all. So they don't let us know, and yeah, have a bit of a power failure. Wonderful, eh? Okay, guys, yeah, I'm going to talk a bit about these gaps today, understanding the gaps and what have you. So we'll just wait till everybody's here, and then we'll have a chat about that as well. And we'll also have a chat about how our account has gone. We got stopped out of New Zealand dollar, US dollar. We got stopped out of Brent crude oil yesterday. So that hasn't worked out for us at all. We got spiked out of that as well. Where's the Brent crude oil? Brent crude oil, we were long over here, and it came down and took out our stop loss. Was it over here? Somewhere was it there? Okay. One of those things, not a big deal. Not too concerned. It just dropped below the resistance and off it went again, but it is sitting in that area now anyway, so it's not really going for us. And then the New Zealand dollar, US dollar spiked us out down here for a stop loss. Where was our stop loss? Was it over here? We got stopped out. I've moved this trend resistance now. It was further down, and it had broken through, and it looked like it was going well, but now that we've developed all these candles here, I've moved the trend resistance up a little bit, because if we go up on the day chart, you can see that it's created a slightly new level higher up. Therefore, it's time to change structure slightly, whereas previously it was lower down and it had broken out. Now we have to move it up and just have a look at where it's going a little bit higher. I've also drawn in a new support level. So my opinion on the New Zealand dollar, US dollar at the moment is if it breaks through the new trend resistance, then we can go long again. For the time being, we'll just have to wait and remain short. I think it's a bit too early to jump back in now. And I think I know it was Wendy that asked me, like, she wants to get into this again. Still very confident that it's going the other way. And that's something we should talk about, guys, as well, being super married to a trade. Be careful of getting married to a trade and believing in it too much, because it can come back and bite you. Right, so we need to work on, obviously, the balance of the account. Just shows you that no matter who you are, you can take losses. I understand that this is a group effort, and we're choosing the trades together, and a lot of the trades have been chosen by you guys, and one or two of the trades have been chosen by me. But at the end of the day, it doesn't matter which way you trade, as long as you trade with a strategy. And at the moment, we've had a bit of a bumpy period. So I'm not concerned if you guys tell me to go long on this and we go long on it and it doesn't work out. That's what's going to happen in trading, and it's a good way to figure out that's what happens. But so it's not anybody's fault if the account goes a little bit down or a little bit up or whatever the case. All I'm saying is you need to learn what happens with a strategy. So with a strategy, this account is, say, I'll have a look at the statement now, we'll have a look at that. But let's say it looks like we're $800 down, $820 down in total. over the January and February period because we've taken a lot of loss because of the spikes. We got spiked out on a number of trades, but it only takes now 2 trades to fix that. 2 winning trades and that's fixed. So that's the basis of the strategy. We only need to win 2 trades, and we've probably lost a number. We'll have a look at the statement now, but we've probably lost a number of trades with the spikes. That this was a spike down. The Brent was a. It's every time somebody opens their mouth this last couple of weeks, it's been an absolute disaster for these types of trades. But that said, the VIX trades have gone fantastically well. And for those of you that have got access to the VIX, I always tell you and I always show you on Trade of the Day, VIX buy at 15 and hold. And it's an expensive instrument to hold. It's not cheap, okay? But you hold it. And every time it spikes like this, you make a fortune. I normally make between 20 and 50 grand every time that VIX spikes. So if you've got access to the VIX on your platform, you've got to trade it. You've got to buy it at 15 and let it spike and give you money every so often. Because every time somebody opens their mouth and it goes a little bit insane, then you make some money out of it. And it's actually an amazing product. I love that thing. Absolutely amazing. It bails you out of all your losses, all your problems, all your issues, and you just don't see the losses then. Unfortunately, on a funded trader market like this is a funded trader markets account. As you guys know, this is your account, our account for us to trade together. Hopefully we don't lose it too soon because I see we've taken $800 in loss. But if you guys have a trade that you think we should try out, or we as a group have a trade that we want to try out, we put it on this platform and we trade it. I have traded 1 or 2 trades without your advice, and they've also failed. The Brent failed. That was a baddie. The Euro-Japanese yen didn't fail. It failed, but it actually made $100 profit at the end of the day. I'd had moved the stop loss up, but that was one of my trades as well. It got spiked out. Just about all our trades got spiked out with all that volatility, but the volatility paid off on the VIX. And what it can do is it can offset that sort of scenario. It is a real pity that these funded trader markets don't allow you to trade with those instruments, but you know, that's life, and that's how it goes, eh? That's how it goes. You can't change that. You can't do anything about that. It's one of those things that we have to live with. But otherwise, the gaps, I'm going to talk about these gaps. You see the euro, US dollar came down, made a gap, came back, filled the gaps. Now, what is the secret behind the gaps? What's the story behind the gaps? So let's talk about the gaps. There are a few of you here already, and I guess these are the most important already that have arrived, the most important people, so you're here. Let's talk about the gaps and let's see what is a gap and why is it there. So a gap, it's created by that time in the market. Maybe the market's closed for a while, it opens up, and it opens up with a large gap. And the saying behind the gap, and some people turn around and say, it's BS and all the rest of it, but it's not. The secret behind the gap is the gap will always be filled. I don't care what you say or who you are, the gap will always fill. The thing to understand about the gap is it might not get filled today, it might not get filled in the next 5 minutes, but it will get filled. In fact, it might only fill in a year's time. It might only fill in 6 months' time. So that's the downside to gap. So you can't really trade with gaps. But you can know that if there is a gap, it will eventually get filled. And there's never a case where the gap doesn't get filled. It always gets filled somewhere, sometime. The mistake people make with gaps is that they believe that the gap's going to be filled immediately. The psychology is, it's a gap, so it's going to fill. So they think it's going to fill now. That's the psychology behind it, and that's the mistake people make. So that the understanding you've got to have behind gaps is that the gap will always fill, but it might not necessarily fill now. It might take a long time for it to fill. Henry says, what is the VIX? The VIX, yes, it's sorry guys. You know, I'm one, I hate abbreviations. I hate it when people talk in abbreviations. I totally agree with you, Henry. It's so annoying when people call things in abbreviations and expect everybody to understand what they are. I'm totally with you on that. I'm a total bugbear with that. I hate it. So the VIX is the volatility index. It measures the volatility in the stock market. Not every broker offers it because it's so easy to trade it, I suppose. So you don't often find it. IG does have it, so that's one of the areas where you can trade it if you can get an account with them. There are a few other brokers that offer it, but very few, very, very few. And the trick behind the VIX is buy it at 15 and wait for it to spike, and then it spikes to 30 and you just make an absolute fortune. What I normally do is I buy one trade with about a $250 risk, and then I add another 250 and I add another 250, and I take it up as high as I possibly can over time because it costs a lot of money to hold it. But if it spikes immediately, you make the money on the first one. If it doesn't spike immediately, you can keep on adding as you go along, and eventually it'll spike and it'll make you quite a lot of money. So if you can get access to the VIX, that's fantastic. It's not everybody offers it. Yeah, so it's the volatility index. It measures the volatility of the market. It's a fantastic little product. I can't show you on this charting program because they don't have it at funded trader markets, and no funded account will offer you the VIX, that's for sure, because they don't want you to win on that. But if you can get hold of that, it's actually a fantastic way to make a bit of extra dosh. So yeah, the account hasn't gone according to plan. I'm gonna quickly go over the account so we can have a quick look at it and just see how it has gone over the last couple of days. And as I said, not well. So it's on the news now. So here's the news, a bit of the old finance news. Of course, Trump and China in talks about the tariffs, and he's given Canada and Mexico a bit of a reprieve. So that was my call this morning, US dollar, Canadian dollar long, if it shows that it wants to go long. Just be careful of my trade of the day in the sense that I might not have taken the trade yet. I might be waiting for the candle to prove something to me first. I'll try and mention it to you guys as I did today. Or it could go the other way and we could end up taking the complete opposite trade. But this month, we've had the two trades, New Zealand dollar, US dollar, which we had in place, got stopped out. The Brent, which we had in place, got stopped out. So those two are stopped out. So we're already $290 down for the month. I don't know why those stops weren't at $200, but for some other reason they weren't. I must actually check up what happened there and why it was like that. But okay, fine. We lost them, so it's probably better that it was like that anyway. Then last month, as you know, the first trade was a null trade. That was a mistake. US 500, that was a stop out. Euro Great British Pound was a stop out with a stop move to break even, which gave us $57 profit. US dollar, Canadian dollar, break even, stop loss, $5.54 profit. Euro US dollar, stop out, full stop out, 230 loss. Gold, that was my fault. I took the profit too early, FOMO, and made the mistake. So even in the 30 years experience, you make the same mistakes. US dollar, Japanese yen, stopped out, 185.35. That's a loss. US dollar, Canadian dollar, stopped out, 124.49. Euro, Japanese yen, that was a stop loss moved into profit. It's one of my trades for us. And there we actually ended with a mishmash of small profits. That's 106.84 profit. It was a stop out as well. But it still finished in profit, so it wasn't the end of the world. So that lost us $533 last month. Not great. And then this month, we're already 300 down with these two trades. So we have to make this back. Two trades can make that all back. Not the end of the world. Guys, if you want to fund a trader account, they are available here. I've put a link in the description. 100% profit split, on-demand payouts. They're quite good. So a $25 account is now $109 again. So it makes me feel a little bit better because that's what we paid. It was down at $89 last month on special. You can get a $200,000 account for $522. It's actually good if you can win, and you are winning, then you can take profits off of this account, which is great for a much lesser amount. So that's why I've actually got the funded trader account for us to trade on together, because if it goes pear-shaped, I'm not losing 10 grand, I'm losing $100. So that's much better for me at the end of the day, rather than losing absolute fortunes with you guys are choosing the trades at the end of the day. So, you'll be playing with my cash. Hi, Frederick. Your comment is, can you? Okay. Can you? Yeah. Don't know. Well, at least the Jennies are holding out. The power's on. And yeah, it was quite a surprise when the the power just dumped us. All right. So this morning on the trade of the day, I did say, look at this for long. If the green candle breaks out to the upside and goes up, because this has broken through, come back and retested, it's retested this trend support. The opposite and flip of that in this US dollar, Canadian dollar, is if it breaks through this trend support and gives us a red candle to the downside, we might need to go short. So let's keep that going. Yes, Frederick, we can swing trade with that funded account. That's the whole point of this funded account, is we can swing trade with it. We can trade the news. They don't tell you how to trade or what systems to use to trade with. You can leave trades over the weekend. You can leave trades overnight. There is a requirement that you need to trade at least 3 times a month. And yeah, what else is there? Not a lot. It's actually pretty straightforward. It's almost like having your own account. These guys are pretty good with that. Look, the drawdown on this account, on this $25,000 account, is 4% per day, which is $1,000 or so. And you're only allowed to lose 2,500 overall, which is 6% or something like that. So, and then they're going to pull the account. But then you've lost $100, you can start again. That's why I say it's sometimes worth it to have these accounts. But there's been a lot of hoo-ha around funded accounts and a lot of scammers and, artists out there and whatnot giving problems with these things. So it's a chance you take. So what I always recommend to people, if you take a funded account, because not everybody's got $100,000 to fork out. Let's be perfectly honest. And we're going to talk about that as well. It's something I need to talk about. But at the end of the day, for those people who don't have that big money to fork out, these guys have provided a platform for you where you can actually have a $25,000 account or a $100,000 account and maybe make some money with it. You might lose a few, but if you win, that's great because you make those profits. And what I always recommend to people, if you take an account like this, don't sit and watch your profits build up. Don't sit. If you open a $25,000 account and you're sitting with $50,000 in the account, then you're mad. Really, if you make $1,000, you make $500, withdraw it, man. Take it out. You can withdraw once a month or something like that. Take the money and get it out of there. Don't leave it in there. Don't leave it there, guys. Take every cent out. That way, the money that you pay for the accounts, you've got back immediately if you've made a profit. And also, I've seen guys on the internet with these funded accounts crying because they've lost $100,000 because the company closed down. And I'm thinking, you left $100,000 in a funded trader account? Are you mad? Never do that, guys. Never do that. And just remember, the bigger the amount gets, the more they don't want to pay you. So, take the small amounts. Take them. Don't be scared to ask them. Send them emails. Say, give me my money. Give me my money now. And get it out of there. Get it out of there as soon as possible. They're not a bank. They're a funded trader system. The sooner you can get your money out of them, the better. And then you also know if they don't want to give it to you, they're a bunch of scam artists and you're not getting your money. At least you know about it, and that makes all the difference. Now, the reason I spoke about this in detail right now is because so many people ask me, can you make a profit out of trading? Can you make a living out of trading? Can you survive on trading? And that's a double-barrel question because, how much is a living is the first question. How much is a living to you? Because a living to you might be $500 a month, and a living to me might be $500,000 a month. two totally different things. It depends if you drive a Rolls Royce or if you drive a beaten up old Toyota. So it's kind of like, excuse the names, guys. Sorry, I didn't mean to mention names of cars. Sorry, Toyota. I did not mean that in that way. But you know what I mean, guys. You know what I'm saying to you. So firstly, we got to determine what is a living and how much is required on a regular basis, an annual basis. The next thing you have to understand about making a living out of trading is most people go into it with a hope of making a monthly income because that's what you do in your normal job or normal whatever you do. And that is also something you've got to put aside because you've got to look at trading as making an annual income and then taking last year's annual income and dividing it over the next 12 months and using that to live on. Because if you're waiting for income at the end of the month of trading, I can guarantee you, no matter who you are, how good a trader you are, how many years you've been trading, you are going to have a few bad months in the year. I just had one in January. So, you have to look at that. You have to understand that you can't work this on a monthly basis. And then the other thing I say is, yeah, you can make a living out of trading, but you need a decent investment amount. Be advised that you can also go bankrupt trading. You can also lose everything trading. For example, if you'd kept your index trades over the weekend and everything spiked out and everything went crazy over the weekend, you could have come back on Monday morning with your accounts completely blown. So with that in mind, you've got to understand that 80% of traders lose money. In fact, well, let's be fair and say 60% of traders lose and 99% lose on day trading. So you have to take that in mind when you're trading and keep that thought. And then also, can I make a living trading? How much do I need to invest to make a living? So what I always say is, if you were going to open a normal business, if you were going to open a cafe on the corner, don't you think you would need some kind of investment to put stock in, to get it going, to put the furniture in, the tills? Even if you didn't have any staff and you were working it all by yourself, you'd still need to set the shop up and you'd need some capital to get that business going. But for some other odd reason, we don't see trading as a business, so we don't need any capital to get it going. It's just going to magically fall out the sky, and trading is going to magically make you a living. And that's not how it works. You need to have some capital to make trading work for you. So that's why I mentioned that, is because a lot of people don't maybe have that capital. So where can you get that capital? So this is what the funded trader markets has offered people, is that capital to get you on the road. And it also helps you and teaches you how to trade and gets you on the road to becoming a profitable trader. So if you lose a couple of accounts or it goes pear-shaped here and there, you're not losing your entire living. You're losing $100 here, $200 there, whatever the case. You're not losing the thousands of dollars. But, how big is an account to make a living with? I mean, how big an account do you need to make a living with? Now, you have to keep in mind that if you're a reasonably good trader or you've been around for a long time, you kind of average 20-25% per year. 20 to 25% per year. Then you've got to work that against the account size that you've created. So if it's a $100,000 account, you've got to work that out for yourself. How much are you going to make on that? Like I said, most of my decent dosh comes from my investments that I've invested over years and years and years and years. And some of my bigger wins come from this volatility index from time to time and some brilliant trades. So, you get the odd good one here and there that can make you a fortune, but you can't rely on that. So those quick ones, those VIX trades and things like that, those are anomalies. So what you're looking for is that consistency. And to get that consistency, you've got to have a decent capital amount to keep that consistency going. I myself have more than one trading account so that I don't leave all the money in one broker, because I don't trust leaving money with one broker. I don't want to have $1 million account with one broker and then he goes and says, bye. That's not going to be funny now, is it? So I try and split it up a little bit. And I like having $100,000 accounts at the brokers, and that's good enough. This is a funded trader markets account. That's $25,000 account. And as you can see, I mean, it's already $700 down. Few bad trades. Things can go pear-shaped. Things can go wrong, but you're not losing that amount of money. You're losing $100 that you paid for the account, which is fair income, eh? Fair go. So if anybody's got a trade, you got to mention it. You got to let me know, so we can take it here and see how we go. Frederick, the big thing about like this Funded Trader account, for example, with our system, you would be able to, like on a cash account, you'd be able to take, say, 10 trades. And if they all went pear-shaped at once, you would lose 10% of your account. And you'd be like, oh, all right, you know. Whereas you can't lose 10% of your account on Funded Trader markets. So what I normally do is I take four trades. And then if one goes to break even, then I'll add another one or whatever the case. Because that way, if they all close at once, it's more than $1,000, and the daily drawdown is only 4%, so you can only lose $1,000 in a day. So I don't want to lose 10% in that scenario. You've got to be careful because we're risking $200 per trade, trying to anyway. So just keep that in mind with the risk. Try and keep the risk, and then keep the trades down. But you know, with swing trading, how many trades do you need open at any one time? You know, it's neither here nor there. 3-4 trades here and there, and as you can see, we've got no trades now because all our trades have been stopped out, all our trades have been spiked out, and we're looking for new trades. Now, yesterday I went once for the gold, but the gold's reached there, and I need it to come back so we can get in again. Right, so Bitcoin's on the up, and then this New Zealand dollar, US dollar, I want to get back in again. I definitely want to look at that again, but it has to break through that trend resistance. Now, I don't think we should be in it as it stands at the moment. The thing is, you know, the other day I actually said in one of my videos as well, I said that, you know, with all this spiking, it's probably doing the scalpers a lot of good. The scalpers are probably winning out of this because, you know, you scalp and you get the spike and you win. And then I thought about it and I thought, well, actually not. Because for them to win, they've got to get the trade right. If they get the trade wrong, it's going to be disastrous for a scalper because that kind of move will take out all the wins. So yeah, they're probably worse off than we are with this volatility at the end of the day. So I wouldn't worry too much about going for scalping just because it's volatility. Rather just trade the VIX and stay with that. Good morning, Wendy. Welcome. Good to see you. Good to have you on board. As you can see, I've got the New Zealand dollar, US dollar up on the board here. It's your favorite trade. Don't get married to the trade, Wendy. It's that's always tricky. What I was just telling everybody is we've moved the trend resistance up. The reason I did that is because on the day chart, we've created this new little level here that wasn't there before when we had the trend broken through here. So I've just added this in now because we've had we got stopped out. As you know, we got stopped out. So I'm just looking at this as if it breaks through the new trend resistance, then we've got another long. It has filled the gap. And as I said earlier, the gaps always get filled. Maybe not today, maybe not tomorrow, maybe not in a year's time, but they always get filled somewhere down the line. And these are already filled. Within a day, these gaps are filled. So they filled rather quickly. So now that the gaps are filled, we just have to see what direction it's going to take. So I would prefer that I've drawn in a nice support phrase here. I would prefer that it goes through this trend resistance before we go long now. You might have gone long here already. Just be careful of the revenge trade, but that definitely was a turning around. It turned around on that candle. It's gone up and it's gone up nicely. So it's gone back. It just took our stop loss out and then kind of turned around and went back. So we've had a lot of spike outs. Spike outs have been a bit nasty. Yesterday, Brent took us out. So we're out of the Brent as well. But very much out, and it's staying at that level we got taken out at. I was actually having a new look at Brent. Just maybe move things around a bit as well. Just to be on the safe side. Let's just have a look at our little line here and see what we've got. Yeah, it's only 2 points now, you see. So it is still over there. But I think what we've got here is coming back for a retest. Okay. That's on the daily. Let's take it back to the H4. So it could still actually come back, retest, and go long again. But at the moment, it's in a bearish trend that is coming down. Let's just see where it comes out. Oh, there is one thing I forgot to do. Yeah, there is a support there. So we've got a big support lying down here at 70, of course. Of course, we mustn't forget that. Okay. So we can actually wait. Let's just see if it carries on going down before we make any moves on Brent again. Yeah, Wendy, that's what I was saying. Let's not. I know you're very bullish on New Zealand dollar, US dollar, and I'm with you on that. And we've got our support here. Now, it was very unfortunate that we got taken out on that. But like I said, I'm just waiting for it to show me that it wants to go through this trend resistance. Maybe it'll come down and go back up first. Let's just see what it's going to do first before we jump in, Wendy. Let's just make sure. Because at the moment, we've got no direction. It's kind of gone back, filled the gap. Looks like it's just sitting around here. I want to see which way it's going to go. Because the US 500 is doing a little bit of a reverse. Looks like it wants to correct. And I'm not adverse to a good correction in the US 500. I wouldn't mind seeing it correct all the way down to these levels down here. Because what a buy that would be. You know, get into the market and sit on it. That will be great. That'll be just like trading the VIX, man. You just buy it and, hey, hold on to it just about forever. Yeah, so, yeah, I was actually, like I say, I was actually thinking that scalpers would have done well out of that volatility, but then I realized, I thought about it. Scalpers don't do well out of that. They normally get taken out. The guys that might do well out of it are the dollar cost average guys. They might do well out of it because they're not getting out of the trade and then it comes straight back and they don't have stop loss in. They might do well out of it, out of these spiky trades. But yeah, scalpers don't always win. You see, assumption, the markets will always lull you into that false sense of security. They always grab you. So we lost a number of trades. We won a number of trades. And it's just a question of getting it back this month and sorting it out, getting it back on track. US dollar, Canadian dollar, that was a huge spike up. Big gap. It's come back, filled the gap, come down. Now, I did call this long this morning, but only if it broke through here with a green candle. It's now giving us a red candle. It looks like it wants to come back down to support again. Let's see if it can hold this support. Let's see if it can bounce up and bounce out. I think it's very dependent, and this is spiking around very much on this news that's going around and the tariffs and all the rest of it at the moment. It's causing a lot of problems for this. And I believe that's what spiked us out on Brent as well, is this whole news scenario and what's going on in the world and, yeah, up and down and what have you. The Euro Japanese yen has also filled the gap. And if it gets back up to here, might actually get a continuation short. Shall we have a look at this? Daily chart. We've got our support and resistance in. We've got this. But we've also got a move on the top. Yeah, that's fine. Keep an eye on it. That's good. H4. Okay. Yeah, worst case scenario, it's going to go down from here. Okay. Hi, Shane. Good to have you on board. See you back again. How's the weather in Sydney, Australia? It's been pretty hot here in Cape Town. I got to tell you, it's been pretty warm. Cool. And now here in South Africa, we have to put up with the fact that now Trumpy's decided that he's going to take away all South Africa's funding because our government's got this thing about expropriating land and stuff like that, and he's threatened them and all the rest of it. But unfortunately, when they do that, it affects our whole country. Yeah, we have to put up with that now as well. Let's see how that goes. But maybe it's good if they help us out and stop all the BS at the end of the day as well. But yeah, it's been pretty hot here. We're in our summer now, February, March. Strong, the hottest period here, February, March. So we're going through it at the moment, and we've had a bit of heat in January as well. But it's still cooler than up north of the country. I used to live up north of the country, and I would hit like temperatures of 40, 42, and stuff like that. Whereas down here, it kind of stays down in the 30s. And then during the year, you kind of average out at 24, 25. The North Australia experiencing flooding. That's interesting. The north of South Africa is kind of experiencing a bit of drought at the moment. They were struggling, but the rivers have lifted a bit, and now they're getting a lot of rain. That's weird. Certainly weird, yeah. Looking good. So yeah, why do 60 to 70% of traders lose? And I believe mostly it's because of these squiggly lines that we look at all the time. It's because of these lines. We're always looking at these lines and these candles and these charts and believing that a system like this is going to make you the money, and all it's going to do is give you the high probability trade. And the high probability trade, once you've taken it, you have to manage it. And of all those high probability trades that we took in the last month or two, you can see a few of them actually lost straight out onto stop loss. A few of them, we tried to manage the trade. They still came back and took out the stop losses at break even. And we haven't really had a good trade. So you got to wait for that good trade to come. You got to be patient. You got to have the strategy, and you got to have the psychology to do this, because a lot of people will see that kind of losing, and those kind of trades go pear-shaped, and they'll run for cover and they'll run for the hills, and they don't want to do it anymore. And that's mainly because they saw the guys with the Lamborghinis and Ferraris touting to them that you can scalp the markets and make millions. And it's unfortunately not the case. It's not something that's going to happen very easily. Shall we have a look at the news, and let's go and see what's going on in the news today, if there's anything worthwhile looking at. Hey, let's check the news. Let's see what's happening on the news. Let's see if there's anything new going on, or if it's all still the same. Nothing much. Trump talking to China. It's the tariffs and the reprieves and the China's curbs. He's actually probably doing the right thing. I don't see a problem. Nvidia's way down at 116. Everybody's panicking. It's a good buy. It's a good time to buy. I know everybody's saying, it's going to affect them and all the rest of it, but actually, it's not the worst time to buy Nvidia. Let me just see. Where's the breweries? Are they here? I'm going to look at adding to those as well, because they also were down nicely. So, you buy your investments for the future. So you're looking at what's going to happen in the future. The funded accounts, one-step evaluation, those are the prices, max overall drawdowns, two-step evaluations. Instant funding is an interesting one to me. They've been offering this instant funding to people now. And so you can get a 5K account for $69, 10K account for $99, $179, $389, 100K account for $769. Instant funding. So you don't have to do any challenge or anything. You're instantly funded. But here's the thing. Your max overall drawdown on your account is only 5%. And your daily drawdown is, 3%. Your profit split is 80%. It's kind of, I don't know if anyone's going to keep their account for long with that kind of max drawdown and that kind of daily drawdown. And I look at the Pro, and you're not allowed to lose anything. No daily drawdown. So, it's questionable. So you want instant funding, there you go. For those of you who are brave enough to take instant funding, go for it, go for it, go for it. swap free, different markets. What I also wanted to tell you about the funded markets is the C trader that we're using now, I'm very, very impressed with. On the other one, we're using the match trade technologies. We're using Trading View with it. And yeah, it's okay. I really like this C trade though. I think it's quite good. It's an amazing little program. I'm actually very impressed with it. I've used so many different programs over time, and that one works quite well. So as I said, this month we've lost these 2 trades already. Both stopped out, so we're $290 down on that. And last month we took a $533 hit on those trades. Would have been less if we didn't make a mistake in the beginning. So that's where we are with the accounts. Trump is bringing the wrong kind of pain. Of course he is. Back to the charts. Yeah, let's just see what it's all about. Yeah. How's the stream going? Looking at stuff here. Just checking stuff out. Oh, Wendy. Hey, Rob, can you tell us about the significance of FNP? Something about FNP. Well, FNP is not something that I deal with or look at. Maybe, yeah, that NFP, non-farm payroll. Non-farm payroll. You had me there for a moment, Wendy. I was like, I don't know what FNP is. No idea. Okay, yeah, non-farm payrolls. As I always said, Wendy, I've used to hang my hat on. It's jobs figures, okay? It's jobs figures, and I used to hang my hat on that news, and I don't anymore. I don't bother with it. It's all about the unemployment change, and it's just the way they calculate the unemployment. And there's 2 ways. There's the normal unemployment, and then there's the non-farm payrolls, and it's just what some things are taken out to make up the non-farm payrolls. It's just a figure. Yeah, as Shane says, they take the earnings losses out of the budget. Yeah, it's non-farm payroll. No, yeah, no, FNP, no, it's NFP or something, non-farm payrolls. So I got the NFP wrong. Yeah. But yeah, like as I say, as Shane says there as well, it's just 2 different types of unemployment and labor, the way they calculate the labor. And yeah, it's not a big deal. So they go up, they go down, and then what actually happens, Wendy, is when the figures come out, they give you an estimate of what the figure should be, and it's only a couple of thousand here or there. So you look at the unemployment on, say, the Thursday, and you get a reading, and everybody panics and does whatever they do with that reading, and the market goes up, and it comes back to where it was. And then on Friday, they give you the non-farm payroll reading, and everybody panics, and it goes up and down, and then it comes back to where it was. The only time you're really going to get a serious situation with unemployment figures or non-farm payrolls is when you have a really big difference in the figures, a huge gargantuan difference. Whether we're expecting 300,000 and you get 0 or something, then yeah, then you can expect almost a market crash or something. But and then it'll stick. It won't come back to normal. It'll stick because that means things are really going pear-shaped. But generally they don't. Generally they keep the figures really close to what's expected, and everybody gets what they expected at the end of the day with those figures. Don't play too much into those figures, Wendy. They're not gonna make a big difference to you at the end of the day. Something that will make a bigger difference to you is, like Shane said, GDP, gross domestic product. That will make a difference to the country. That's money flows in the market and economy and that sort of thing. But your non-farm payroll figures, it does move markets, but everything always comes out very close to where it should be. And the markets are based very much on money flow within the country. I could go into a lot of detail about how countries don't actually need a taxation system. You don't actually need to be taxed on your salary and that sort of thing. You know, it's a system that the countries have put in place because the country has the money and they kind of fill up the economy with that money, and they give you money to use, and people spend it and use it back and forward and all the rest of it. And when they need to fill it up, they will, and when they need it back, they'll take it back. And the way that money flows back and forward, and the way they pay for their army and all the rest of it, and the value of the US dollar against the rest of the world, etc., that is what effectively makes the market's value move up and down, especially things that are pegged to the dollar. So it's very complicated to go into in detail, even for me, but that's what it's all about. It's not really about these little figures that come out and these little economic figures that come out on a regular basis. That's just monetary policy. And while monetary policy can move things around, at the end of the day, it's got a lot to do with the way the money is flowing back and forward within the country and the value of that money within that country and the country's asset value overall. That's going to make the difference to where your stock market is or your value of your currency is at the end of the day. So these little things will move markets up and down, but they won't be the be-all and end-all of it all. You know, GDP is quite important, CPI and all that, but it really has to move way out of whack for it to be a big concern. So what traders do is they look at those figures and they think, ooh, the world's going to end in a few months' time because this figure came out. So they start selling off. And within a couple of hours, everything goes back to normal because the big guys, the guys that know all about what's really happening, they know that nothing's going to change. So they see that drop and they dive in and they buy like hell because they know it's cheap and the market goes back to where it was. They're just waiting for you to sell off in panic so that they can grab that money. They can grab that liquidity and they take that money out. So that's why I stopped playing into those small news events. What I play into is the big fundamentals, the big news, the big things that happen in the world. I guess Donald's causing a lot of big things to happen in the world at the moment. I mean, tariffs and things like that are a bit of a problem. But, you know, bigger things like banks going bankrupt or they find out Bernie Madoff is a fraud or whatever the case, things like that. That moves markets. That makes a big difference because it's a large flow of money, a huge, massive flow of money. You know, 2008 crash when Lehman Brothers went down and everybody started, like domino effect, started to fall down behind them. That's a big event. Those are the news events I'm looking for. But I'm not worried about these weekly things. What you find yourself doing, because it's daily, it's not even weekly anymore, it's daily. You're waiting for a news event every single day. I mean, look at all these news events that are happening today. There's plenty. I mean, you can go through them all, and they're in different countries. And now you sit and you wait for each and every news event. And every time a news event happens, the market moves around a little bit. These are not what's causing the spike. What's causing the spikes is old Donald's little chat about tariffs and things like that at the moment, and countries having a little battle with each other. Those cause the big spikes. Daniel, late to the party. How's it, Daniel? Donald speaks to the market moves. I agree. Another gap fill yesterday. Missed that. Crazy. Going to be busy a week again. Forex Factory is really helpful in explaining all that. Yeah, you can go and read up on it if you want. And I'm not very good at explaining all that. It's I kind of know what's going on in the background, but I don't go into detail with it. So I know how it's all operating, but it's very difficult for me to explain that to you. Struggling with internet, my side, so that fun fact to deal with too. Yeah, Daniel, I actually had a power failure just before all this happened. So everything's running on Jenny's today, and I haven't put my solar system in yet. Yeah, no. But yeah, Daniel, the gaps. I was talking about the gaps earlier. I know you came late to the party. I was talking about how the gaps always get filled. But the mistake that people make is they think the gap's going to get filled immediately, and that's not necessarily the case. The gap can get filled over a year. It could get filled over 5 years. It could get filled over 5 minutes. It just means it's going to get filled at some stage in the future. And the mistake that people make is they expect it to get filled immediately, and that's not the case. That's definitely not the case. So hopefully you can stick around with your internet, Daniel, and hopefully it all goes well and we can do something on that. Yep. Say Forex Factory is really helpful in explaining that. Let's have a look at, see if we can find it for you guys, because that will be quite interesting, and I'll put it up here for you. You guys can all go and have a look if you're interested in that sort of thing. Boom, 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 boom. Boom, 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 boom. There's a bit of news there and what have you. Just having a look here to see if I can. Oh, it's actually quite a nice little product. Okay. Good. All right. Sure, if you guys want to go there, you can go and figure it out. Actually struggles to fill the gap yesterday. Got full just at the close, NAS 100. You know, if you look at it, I noticed the US 500 filled the gap quite nicely, but then the Germany 30 didn't fill the gap. See that? So Germany 30 still left the gap here, which I guarantee you will get filled sometime in the future. Might not be now, but it will get filled someday. So if you buy this long down here, and we all know you're going to buy this long and one day it's going to go through there and it's going to fill that gap. It doesn't take rocket science to know that it's eventually going to fill that gap. That's what it does. Right, so our Brent trade failed yesterday. That's one of those things. That's down. Anybody got a trade today besides the New Zealand dollar, US dollar, which we, like I said, I want to wait for it to break through the resistance before we take that one again. What's your trade on the NAS 100 there, Daniel? I suppose it's a bit like the US 500. Are we short? Are we long? We should probably hang on a bit and just see. Okay. Let's not preempt anything, eh? You see, Shane, it took 2 days to fill the Aussie dollar, US dollar gap. And 2 days, yeah, that's fine. 2 days. 2 days is good. I've seen gaps take a year to fill. You know, people expect a gap to fill immediately. Gaps don't fill immediately. They take a while. They take a long time to fill sometimes. But yeah, in many cases, like for example, this is pretty nice, these gaps. They all got filled within a day or two. That's amazing, actually. That's insane. But you can know that a gap will get filled. Just got to be patient. Dum, 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 dum. You've been trying to short gold, Shane. Tricky one. My call yesterday was long and that worked out, but you know, at the end of the day, I'm thinking, yeah, it'll go short now, come back down to the what's now support was resistance. This yellow line is a resistance line. I just drew a line in instead of a rectangle. This is a strong resistance line. which has now become support. It came back to retest it, bounced up. Looks like it wants to come back again. But I'm thinking it might just come down in structure and just carry on up. If you want to go short on it, draw yourself a trend line. Here's a trend line. Okay. So my opinion on going short on it, this needs to come down, break through here, and break through this trend line, this trend support, the main support and the trend support. Breaks through that, you can go short. But while it's above this, while it's above these lines, you've got to stay long. You can't go short on it. It's too early. Is the US 500 on the golden zone? Okay, what I call let's see what we got here. We're on the H4 and let's put a fib in. If you look at this fib, right, it's come back down, it's gone into the golden zone, it's broken back out, and it's at the 38, it's above. So the golden zone on the US 500 is here between the 59.50 and the 59. So yeah, it looks like if you're trading that way, I don't trade this mostly normally, but if you're looking for the golden zone there, it was Frederick was asking that, then it's here around the 59.50 to 59. So it's above at the moment, it's high. It might come back into this, it might not. But you see how it's in confluence with the trend support. There's a big trend support running through here. And that trend support's running right through the golden zone. So what you can do is take all this rubbish out the way. Now you know the golden zone's here. So if it comes down to this trend support, it's in the golden zone. And if it bounces up and gives you a green candle, you might get the long trade. So yeah, there you go. You're in the golden zone if it gets down to that trend support. Gold is too focused on that 3K mark. People will push it there. Round figures, Daniel, round figures. That's what people look for. Round numbers. Round numbers are very important in the market. People don't understand it. You know, I've been saying in all my videos, and I hope you guys have been understanding what I'm saying, is the market is more subjective than you think. It's not an objective thing. Everybody looks at the market and they see numbers and they see charts, they see maths and they see candles, and they think it's all factorial, they think it's all algorithm, they think it's all mathematical and objective. And it's not. It's not objective. It's subjective. What's making these lines move, what's making this move around is human beings, is people. People are buying and selling. And that's subjective. And that's why round figures are so important. Because people psychologically like round figures. Who likes 61.238.96? Nobody likes that. But tell me 61 and I'm all in now. I'm there. So it's human beings, and you know, it's a very, very subjective thing. I know a lot of people will argue with me about that because all they can see is this charting program, which has obviously been made up of ones and zeros and algorithm factorials and all the rest of it. Okay? I understand that. But if you go to where I came from when I started trading, we started trading on a piece of paper. We had a piece of paper and I drew lines on it. And I drew a straight ruler line through my prices and I worked out where I was going to buy. Nothing mathematical about it. It's just human beings buying and selling. Now suddenly, because we've got computers and because we've got charts and we've got things moving up and down in front of us and little lights flashing, suddenly it's factorial, suddenly it's mathematical, suddenly it's all about the charts. What you're looking at when you're looking at a chart is what happened in the past might happen in the future because it's high probability that it'll reoccur. And you think that's because of a mathematical equation. No, it's because human beings like me and you are creatures of habit, and we tend to do the same things over and over again. Even if we feel like we're not routine, we are. So that's what these squiggly lines are. We're doing the same things over and over again. We make the same mistakes over and over again. So when you look at a chart and you say, well, it did that last time, it should do that again. That's effectively human beings being creatures of habit. That's what it's about. And the sooner we get that, the sooner we start to understand what's going on, and it's all about strategy. It's not about lines. Of course, the spikes are like black swan events, and that's what takes you out with your trades and your stop losses and things like that. Is those events, those spikes take you out, and you go, you know, that's kind of a black swan event because Donald Trump stood up and said something, and then poof, there goes your trade, and it suddenly doesn't look like it looked like before because that spike wasn't there before. That's the whole scenario, and then that you just have to work through and just keep on going, and you just have to keep on getting over those hurdles, move on to the future. Morning, Kevin. Good to see you, man. Welcome back. Happy prosperous trading, guys. See you guys on Thursday. Don't forget to hit that like button before you go. Thanks, Daniel. Hope he hasn't gone yet. Cheers, Daniel. All the best. See you soon. Daniel's one of our long-term subscribers and members, been around for a long time, and he's with the channel, and he'll be with the channel until I fall off. Oh, Thursday, I might not be able to do the live show on Thursday because, unfortunately, I have to go into the hospital for something, so my eyes. So I don't know if they're going to operate or not, so we'll see. We'll see what's going to happen. Okay, but yeah, we'll sort that out. See how that goes. See how that goes. So yeah, as I said, people ask all the time, can you be a profitable trader? Can you make money out of trading? And as I said to you, it's all relative. It's really dependent on you. It's really dependent on how much you invest, how much you're prepared to invest, how much you've got. And like I said, these funded accounts can actually help you quite a lot if you don't have the money to invest, because then you can invest a small amount and have a bigger account and play with bigger amounts of money. So there's nothing wrong with that. Like I said, just withdraw your profits as quickly as you possibly can and don't leave them with these funded trade accounts, just to be sure that you get your bucks back. Let's look at it. If you pay $100 for a $25,000 account, and then you go on to qualify and you go on to get a profit and you make $200, you take that $200, then you've basically got your account for free. Great, isn't it? Morning, Eugene. Welcome. Good to see you on board. So as long as we work it out that way, then there's nothing wrong with it. I've seen so much negativity surrounding a lot of prop firms and whatnot, but I see a lot of kind of stupidity around it as well, where the guys have lost $100,000 or $50,000, and I'm like, how are you leaving that amount of money in a funded account? That's insane. You know, I wouldn't leave that amount of extra cash in a normal cash account. If I make 50 grand on a 100 grand account, I'll take 50 grand out and put it in my bank account. I'll leave the 100 grand because that's my risk. I'm risking that. I'm risking the money. Any money you put in a broker's account is at risk. Even if the broker's been there for 25 years, it's not a bank. They are regulated, but it's not a bank. You could get 10 cents back on your dollar or rand or whatever if these places go pear-shaped. And you know, when these places go pear-shaped, they go pear-shaped overnight. You have to understand that. It's like if you have a job and then you're working there and everything seems fine, everything looks great, and you turn up Monday to Friday and you're working, and then Monday morning you rock up and the gates are locked and closed and it says go home. Pretty much how all these things operate around the world, which is why you don't hold index trades over the weekend if you can help it. This weekend, if you were long on the indexes on Friday, Monday morning you woke up to a bit of a shock with those gaps. They would have been pretty disastrous to a lot of traders out there, a lot of big traders. Luigi, thanks for coming, and I'll see you guys soon. Thanks, Luigi. Thanks a lot. That's fantastic. Enjoy your day, Luigi, and all the best with the trading. Hope it goes well. Right. Where are we? Let's have a look at Bitcoin, just out of interest. What's happening on Bitcoin? It's doing some funny stuff, Bitcoin, I gotta say, but it's trading in a range. It's staying in this range, and if you take it up to the day, sitting in that range, and it's had a bullish run, and it's created this flag pattern. This, let me just take it to a line chart, because I think this needs to move now. Yes. 1, 2, 3, 4 good points there. So that's where your trend support has moved to. It's moved along a little bit. Let's put it back on the candles, see what it looks like. This is a long tail. All the buyers got back in, so it's staying bullish for now. The bullish is getting very close to this resistance level at the top, so it could push it through and push it up, or it could break to the downside and break out. It's very dependent. Let's see what it does, and then let's just have a look out of interest at the weekly chart. And if you look at the weekly chart, straight up bullish, bit of a flag pattern. This will resolve to the upside usually. There's a good chance that this is going to resolve the upside. It's looking kind of bullish on the weekly as well. So yeah, on the H4, where's my mouse? There we go. Yeah, okay. So Bitcoin, crypto is actually still looking kind of bullish. I don't want to buy it here. I'm not an investor anyway. I don't invest in crypto. As you guys know, my feeling on crypto, it's great for a trade because it's a tradable instrument like anything else. You can buy and sell it. It's the same as buying and selling the New Zealand dollar, US dollar. You can buy it and sell it. The only trouble with crypto is you can wake up tomorrow morning and it's all gone. Well, I doubt it on Bitcoin because that's kind of almost regulated. And the guys are kind of getting a bit iffy about it because there's some really too big to fail guys who are invested in it. But my opinion of crypto in general is it's a fresh air product. It doesn't hold an asset value of any kind. It doesn't really give you any indication as to what it is. So it's basically traders trading against traders. That's all it is for me. So investing in Bitcoin is not, I wouldn't put my money in Bitcoin and walk away and sleep and leave it. Not like, like we've got investment accounts where we buy into Anheuser-Busch and we buy into Nvidia and we buy into all these different companies. You leave the money there, you sleep, you don't even look at it, you just forget about it. One day it'll be worth something. I would never do that with crypto. My opinion of crypto is you'll wake up one day and find out it's all a big Ponzi scheme. So, yeah. So, yeah, there's a gap. Okay, BTC, there's a gap. You say you saw a gap on the weekly. Let's have a look. A week. Not showing here. Maybe it's just this program that's not showing the gap. But it's not showing a big gap here. There is, however, a fair value gap if you want to refer to that. But for me, I'm just seeing a flag pattern and up she goes. There's no real actual gap on it. Now, Bitcoin looks bullish, crypto looks bullish. It looks like it wants to go up. I would love to see it come down here and you get a nice trade up, but I don't really want to trade it up from here. It is kind of iffy. We'll see what it looks like in the future. Okay, on the IG account. All right. I'll have a look there later. Just see. Okay. You see, that's the thing, Kevin. When they say there are thousands of coins available on crypto, I've never actually had one in my hand. Never seen it, never felt it. And what is it actually based on? It's based on a premise of it's somehow part of an internet scheme of people buying into it. And Yeah, it makes no sense, to be honest with you. It really doesn't. It's, for me, crypto is still fresh air, and it doesn't hold a proper asset value. Where's the asset value in it? Where is the asset value, and who holds it? Who owns it? Yeah, gold. Gold is something you can take out the ground. You can put it on your shelf if you want to, put it in your safe, and it holds some kind of asset value. And if one day everybody breaks down, I can use it to barter with, perhaps, it's an asset value. But yeah, as far as investing goes, no, crypto I won't invest in, but great for trading, nice and volatile too, good trading. And Eugene says he's on a sell on the BTC now. Okay. Basically, I'm looking at Eugene. What I'm looking at is just this weekly chart on BTC. I'm not an investor of BTC. Like I said, crypto is not my thing. I'll trade it, but not invest in it. But what I do see here is a flag pattern on the weekly. And a flag pattern on the weekly with a bullish run like this normally will resolve to the upside. So, and then also if I look on the daily on BTC, I'm seeing this trend support. The trend support, it's above the trend support. It's getting close to the resistance. There's a good chance it'll push through that resistance and burst to the upside. And when it does that, it's going to do it very fast. So if you are on a sell, watch your trade. Just watch yourself on that particular one. And Daniel's back. Welcome back, Daniel. Okay. Good show. Yeah, so as I was saying, Daniel, I might not be here on Thursday. I've just got to go to the hospital for the eyes. So I'm not sure I'll be able to do a live show on Thursday. Yeah, keep your eye on it, Eugene. For Thursday, I might be off. If you take a screenshot, you can actually put it on this chat. There's a little plus button at the bottom there. And I'm sure you can just paste it there. Otherwise, send it on the Discord or something like that. We can have a look. $20,000 investment end of the year. What will be the profit approximately? I see, or is you see? Yeah, it's get sorted out. I've got this rare genetic thing in my eyes which can cause a form of glaucoma or whatever the case, which I have to sort out. It's very easy fix with lasers and that. It's got to be done. Okay. US dollar CHF. Do I have US dollar CHF on the front here, or do I have to go and look for it? Let's see, USD CHF. Okay. I'll add it to the Rob watch. Somebody obviously wants to trade it. Let's have a look. Watch lists. Let's close that. Okay. So this is the US dollar CHF. Let's just see what we've got here. Double top. I can see a double top already. All right. Alt 3. A big double top in here. I'm just going to draw that in. Because it is here. I mean, might as well. So we've got a resistance. Okay. There's support's down here. We can actually draw that support in as well, just to be fair. So we know where it is. And then we can have a look at what are we going to do with it. Let's make that yellow so we can see it. So for a swing trade on the daily here, it looks like it wants to go short. Okay, but not yet. It's still long. Still a long trade as we stand. But looking interesting, yeah. I would say you could have gone short there already, but it might hit this trend support and bounce up. So I would wait for it just to break through this trend support, give us a red candle to the downside, and you can take it short. The risk to reward's quite good. Risk here, reward down here. So it will look like a pretty good short if it just gets to this level just below the 90.7, I would say, and you can take a trade there. But Daniel, I eat everything, man, or anything. My diet's terrible. I know that. Yeah. Frederick, what do you mean by 20,000 investment end of the year? What will be the profit approximately? On what? So you want to invest in something. You want to invest in something for 20%. All you got to do is work out for yourself what kind of profit you're expecting. So what I'm going to do, I'm just going to take us here quickly to the investment calculator just to give you an idea of this. Okay, so if you go to the investment calculator, so you put 20,000 Rand or $20,000 in 1 year, what's the return rate? How much are you expecting to get? 20%, 25%, 25%, right? Additional contribution, well, clearly you say zero because you're not going to add anything. So if you put $20,000 down for 1 year at 25%, what are you going to get? Probably about starting amount 20,000. There you go, $5,000. So you're going to get $25,000 at the end of the year. So you're going to have $5,000. If you don't add anything and you get 25% income, you're going to get $5,000, $25,000. Go to this calculator.net. It's totally free. And just do your calculations. Depends what your return rate is, how much you're going to get back. How much is that trade that you're talking about? How much is it going to move? Is it going to move up? Is it going to move down? Whatever the case. Okay, so that's how you work it out. There's no other way to work it out. You can't guess where the price is going to go. So you can just take an average and say, I think it's going to go there. And that's it. Nobody's got a crystal ball. Nobody can know exactly where something is going to land. That is clearly impossible. And it's not easy. But yeah, Daniel, my diet's bad, I know. But unfortunately, this one's not my diet. It's genetic. They actually told me it's a genetic thing that I've got. Okay, right. Okay, so Frederick, you happy with that? Okay, good. But get that, use that little calculator and work it out and see where you come out. Sometimes you have really good wins and sometimes you have really bad wins, and you just got to average it out at the end of the day and say, well, that's what I'm expecting and that's what you're looking for. If it works for you, then it works for you. Okay, so got the Jenny's running in the background. I really need to sort out the solar. My brother-in-law was working out on a project for me on that, and and then you forget about it because there's power every day and everything's working and everything's fine, and then the power goes off and you go, oh, why didn't I do it? I'll get to it. I'll sort it out because I know we're in deep trouble now because old Donald's told South Africa you're not getting any more money. So clearly we're going to be in deep trouble now. Yeah. Okay, so Frederick, what you got to do if you're looking at investments, is say to yourself, hey, I want to invest in investments. Start with one share, that's fine. Apple's a good choice. There's nothing wrong with it. Choose good companies. Clearly, choose good companies. Don't choose penny shares, for heaven's sakes. Choose good companies that look like they're going somewhere. Choose things that you would buy in the market. Would you buy yourself an Apple phone if you had the money? Yes, probably. That's a good investment. You know what I mean? So look at things like that. The retail stores, would I shop there? Yeah, I would shop there. That's probably a good business. Does it look nice? Does it look like they're making money? You can have a look at their financials and that sort of thing. In your early days, try to build up, say, look, if you've got $20,000, then maybe split it into 3 shares to start with. Maybe buy Apple, Coke, Nvidia, or Apple, Coke, and Amazon, or something like that. Okay? Some good shares, and then eventually split it into 5 and eventually split it into 10 as you add to it, as you grow. You see, the best way to invest in the market is to look at it as, I'm going to make money over 10 years or 20 years or whatever the case. And if you invest in the share market over that period of time, because you'll have good years and bad years, over that period of time, you should average about 20-25% per year over that period of time, because it's time in the market, not timing the market. Trying to make the money back in a year is difficult. If you're trying to make it back over 5 years, a little bit easier. Make it back over 10 years, even easier. Over 30 years, it'll turn you into a wealthy person. But you've got to try and add money to it every month to make it bigger, to make it better, because that really does make the improvement. You can put 20,000 in and just leave it for all those years and you'll make money on it. But wouldn't it be great if you could add a few $100 every month to that investment, and then at the end of the period, see how big it is, because that's when it grows. 1 year is not really a good investment period. You know, if you're investing, you've got to look at 10 years and up. That's a good investment period. But any investment's a good investment, and an investment is a set and forget. It's not trading. You don't trade it. You just put it in and you forget about it and you come back. Because I guarantee you, if you try trading those shares, if you invest in those shares and you try trading them up and down, you'll most likely make a profit, but you'll probably come back with a 15% profit, whereas if you just left them, you'll probably get a 25% profit at the end of the day. Kevin, we normally have a lot of load shedding. You asked if the power goes off regularly in South Africa. Yeah, we normally have a lot of load shedding. But the situation is that the last year or so since the elections, it's been good that we've had power back. We've somehow managed to keep the power on. And then this weekend, we had load shedding again. The power went off again, on and off, on and on, on and off. And then today, without any warning, we got this power cut, seemingly planned maintenance, which wasn't really planned with me. Nobody told me about it. Are we selling Brent oil? We can. We sure can. It looks like a sell to me. It does look like a sell, to be honest with you. We can sell Brent. Daniel, power goes off on the daily. You guys at the markets, let's take a look. We'll deserve with tax the markets. Can I invest in stocks without a stop loss, or is there another platform to use? Eugene, if you want to invest in stocks without a stop loss, you have to have a broker. Look, I don't use stop loss for stocks. If I invest, I invest. I don't put stop losses in. I have one in my mind. If it goes pear-shaped, I get out and replace it immediately with something good. But in general, if I buy a stock, I set and forget. All you need is a local broker, a broker that you can invest with. In South Africa, we use a good one is Easy Equities, because you can buy portions, you can trade small amounts and all that sort of thing. They're regulated. And there's a link in my description if you want to go and get that. I don't get anything for it except a little bit of a noddy badge, but you get about $50 or something like that if you go in on that and invest. So if you want that in South Africa, you can go down to that and get it. But if you're not in South Africa, you're going to have to find a broker that's close to you. That sometimes all of the banks will offer you an investment account as well on your local index stock market. Look, I invest. I don't just invest on the South African JSE. I also invest on the US 500. I also invest in the UK and that sort of thing. So I move my money around the world a little bit. It's good for me, especially with South Africa being in a tight spot. So you can open a few accounts, brokerages overseas, but the brokerage I work with here in South Africa allows me to trade offshore. So I can buy shares offshore with that broker, which makes it so much easier for me. And then it's investments that are registered on the market, on the index. So yeah, you can invest, and you don't need a stop loss when you invest. Invest in yourself, learn from experience, so like Robin, returns will flow better than shares. I know someone from Ghana and the power goes off regular, so generators are required by everyone. Yeah, I have a generator, but I'm looking at moving the house off grid and going to solar. It's going to cost me about 260,000 Rand. I've looked at that already because I'm running a 3-phase electricity in my house. It's a big place, and I need to look at that. So who said we need to go short? Do you want to sell? You guys want to sell Brent onto this account? We can do that. Let's sell Brent oil. Before I go, let's sell Brent oil. What's the stop loss, guys? Anybody got a stop loss for me on Brent oil? So we're selling. So shall we put the stop loss? Let's put it a little bit higher because of the spikes, guys. Let's make it 78.50, eh? I'm just, you know, the stop losses have been rather nightmarish. What have I done now? I'll have a look at that now. Oh, of course, I got to put it on a sell. That's why it's upset with me. Seriously. Okay, there. Now it's happy. And then let's do a take profit at 70. Okay, 70. That looks fair. Okay, so take profit 70. Stop loss 78.50. I'm putting it up here. Okay, I don't know. Hopefully a spike won't take us out. 78.50. 2 lots. How many lots shall we buy? Let me take it down a bit. $233.60. Are we short on Brent crude oil? Are you guys all good with this? Okay, guys, are we going short on Brent crude oil? Are you guys happy with this trade? Do you want to do this trade? Is there anybody against this trade? You guys seem to be quite okay with going short on Brent crude oil. So let's go short. Right, I'm taking the short, guys. So if it loses, it's all on you. Okay, Brent crude oil, place order, sell. There you go. There's your trade. Okay. So we're short on Brent crude oil now. We were long yesterday. We got taken out. Today we are short. Okay. Shane, what do I think investing in stocks with the PE of 12 to 22? Henry, it's done. Yeah, there we go. We're short. Shane, the price to earnings ratio was always in the old days a thing of anything below 15 is good, anything above 15 is bad. But these days, I find that the valuations or forward valuations, because you must always look at forward PE, because you're not looking at the PE of today, you're looking at the PE forward, because you want to know where the company is going in the future. And I've found a lot of companies that I'm invested have got forward PEs of 30, 40, 50 these days. So that's kind of gone by the wayside. Now, yeah, I've made that mistake before of thinking, oh, well, you know, ignore the PE and whatnot, and then everything comes crashing down. But the one place where I will be happy to dollar cost average is in investing. If I'm invested in the stock market and I'm holding shares forever, I'll actually be perfectly happy to dollar cost average that. I don't mind if it goes a little bit into arrears. So because it's a long-term investment, I'm not looking at the next year. I'm looking at the next 10, 20, 30 years, if I last that long. So, but yeah, I'll invest in a stock with a price to earnings ratio of 12 to 22, especially a forward price to earnings ratio of 12 to 22. I'm happy with that. What I understand about price to earnings ratios, what I've learned over the years, is they fluctuate and they change with earnings and that sort of thing. So when you see it today and the earnings come out, they might be different tomorrow. I wouldn't concern myself too much anymore. The price to earnings ratio like that, I'm more than happy with that. But by the same token, you got to look at the company for what it is. So, for example, if you're investing in Amazon, I'm not sure what the PE is now, but the PE is probably higher than that. You know, you got to look at what you're investing in. It's a great company. It's got a few. It's looking good. Even Nvidia now, Nvidia's looking cheap. You've got Anheuser-Busch, which is looking cheap. You know, all of these companies are actually looking cheap. I'm adding to my investments at the moment because they've come back a bit. They're looking a bit cheaper, and I'm happy to add to those investments because all the hype will die away. The only time I become unhappy with my investments is when I start hearing words like fraud and Ponzi scheme and stuff like that. Then I'm off. But if things are just a little bit of talk here and there, then I normally will hold on and keep it going. So a PE of 12 to 22, I'm actually quite happy to trade into that. If the company's good, if it's a good company. That said, if it's an unknown, if it's a growth company that really hasn't got a reputation with great CEOs that are doing well and all the rest of it, some unknown company or something, then I'll strongly look at the earnings and I'll strongly look at the forward price to earnings on that, because I don't know the company, I don't know the CEO, I don't know what the future holds for that company, so I'll be careful with that sort of thing. Yeah, Frederick said it's sitting on this, but okay, no, let's see what happens. Okay, don't worry. It's looking rather weak, so I'm just going with it. Okay, it's already going against us. We'll see what happens. Tesla at a PE of 188 was over 1,000 a couple of years ago. Yeah, no, look, you're quite right. That's the thing, Gary. Is, you know, sometimes these days you look at forward PEs and you think, you know, this is crazy. But then the earnings come out and those forward PEs change rapidly. And 188 is still too high. But at the end of the day, look at the company and you think, maybe it's got a future. You know, maybe it can do well. What you've got to be careful of, if you look at a company like Tesla, what you've got to do, this is how you fundamentally look at an investment. So I look at Tesla and I think, okay, that's an investment. You're invested in it. It's going in the right direction. It's doing well. But now I start to concern myself with all the other companies that have been around for 150 million years, like General Motors, Ford, you know, all the others, BMW, Merck, all those. And I say to myself, these guys have now started to fill that gap as well. They've come out with new technologies and future cars and all the rest of it. The Chinese cars are coming out with all the future stuff and what have you. And the Korean cars are coming out with all the future stuff and what have you. So Tesla's not on their own anymore. And the name brands have got that 100 million years of experience with selling cars that Elon Musk maybe doesn't have. So I look at that and I think maybe a better investment, you know, maybe I should look at the other car companies as well, or maybe I should be careful with Tesla because maybe they won't do so well against these marvelously experienced companies that are basically trying out new technologies as well. So just be careful of that kind of thing when you're investing. You've got to look at what's out there and what's going on. Brent oil. Okay, so this is Brent. Daily head and shoulders. No, little, very small. It's a. If it plays out, fantastic, because it's a biggie. What I'm hoping for here is on the daily that it'll get down to this main support level, come down and finish off that. It's a very small head and shoulders, eh? It's not very big. It's tiny. I wouldn't work on the head and shoulders, but yeah, I'm looking at the possibility that it could actually just fall straight down into the support level here now. It's kind of given up on going up by the looks of things, so let's see what it does. No worries. So guys, I got to head on my way. I got to go before the generators run out of fuel. Just kidding. That's not going to happen. Big fuel tanks. But no, I do need to head on, and I need to get on with a few other things. So, like I said, Thursday might be a bit of an issue, guys. I don't think I'm going to be here for the live show on Thursday. Sorry about that, but unfortunately, the hospital appointment landed on that day. No big deal. It's just something that's got to be done. And then sure by Friday everything will be sorted and back on track. And then we'll get the live show back on the road again next week. And then Thursday morning for you guys, the members, I might not be able to even do the trade of the day in the morning. So Thursday is just going to be one of those days that Rob's going to be off for a day. Okay. And I'll be back with you on Friday morning. So guys, thanks for being here. Thanks for watching. The Brent trade is in. Hopefully it makes a win, not a loss. The whole point of trading is the strategy. So we have a trade in. We have a stop loss up there, 78.50. We have a take profit at 70. If we win on this trade, we make $465. If we lose on this trade, we lose $200 and I think it was $233 actually, but okay, at the moment it's $214. So that's $233 we're going to lose. So the win is good. We need 2 of these wins to get our account back up to normal. So let's hope that it doesn't go too green and keep going up. Let's hope that it actually does go short. It does kind of look like it wants to go short. So let's see what it does. But guys, thanks for being with us today. Thanks for watching. Have a wonderful day further. Don't do what I wouldn't do and enjoy. Thanks for everything.